Hello everyone, it's Dale here. Welcome to this video from the Trade of the Week series. In those videos I walk you through my trades from A to Z exactly as I was trading those trades, so you can see how I apply all the things that I teach you in my other videos and in my courses. So let's get to it. Today I'd like to talk about a trade which I took on the US dollar, Canadian dollar. And what you see before you, this is a 30-minute chart of the US dollar, Canadian dollar. This is NinjaTrader 8 platform, and what I want to show you here is a trade. It was a short trade, this red line, this was my short level, and now I'd like to talk about the reasoning behind the trade entry. So as you can see, there was a rather strong sell-off a couple of days ago, and that trade was based on that sell-off. When there's a trend activity like this, what I want to do is I use my flexible volume profile like this to look for significant volume clusters to trade pullbacks to. So if you look into this recent trend activity, then there was a significant volume cluster right here, and I took a pullback to it, went short from there. This was a winner here. But what I want to talk about today is this volume cluster. Second one in the row. If you look at the volumes, it looks even stronger in my opinion. So that was the reason number one, this heavy volume cluster being within that trend. Because those volume clusters, they represent places where sellers were active as they were pushing the price downwards, right? And price tends to react to those heavy volume zones. So that's why I trade pullbacks to those. And yeah, so that was the reason number one, that volume cluster here, this volume cluster. Another reason why I went short from this level was that there was a fair value gap right here. Let me highlight the fair value gap. This was a fair value gap. That's from Smart Money Concepts, and I like to use it together with my volume profile setups. And when there's a bullish scenario of the fair value gap, I like to trade from the beginning of the fair value gap, which is in here, exactly at that short level, as you can see here. So that's the second reason why I went short from this level. Yeah, let me now talk about the stop loss placement for this trade, all right? So the short level was here, and regarding the stop, my stop always needs to go behind a significant barrier. In most cases, the significant barrier is heavy volume zone. So if you look at this heavy volume zone, that's the barrier, and the stop needs to go behind it, because that barrier should protect my trade, right? So that's why my stop was in here. This was the stop. The stop was behind that heavy volume barrier, and also there was a little swing point here, so I placed that stop at the top of that swing point. Now in the evening, the level got hit in here, and at that time I had to place my take profit. I always place my take profit with bigger risk reward ratio than 1. So risk reward needs to be bigger than 1. And in this trade I actually planned to get a little bit more out of this trade. I usually look for some support where I quit my short trade. In this case I was looking at the first deviation here, first deviation of the weekly VWAP. So in the evening when I went to sleep, I placed my take profit in here. This is where the first deviation was. So this is where I placed the take profit, and then I went to sleep. During that time, the first deviation of the VWAP went up, so that take profit placement wasn't really making any sense here, because the first deviation was already higher in the night. The price already made a little reaction to that, so I basically had to look for a new place, new support to quit my trade. When I came to the computer in the morning, somewhere in here, the price was already dropping, and at that time I had to make a decision where to move the take profit or whether to keep it where it was. Now at that time I noticed that there was extremely weak high. Let me delete all this and let me show you. There was this weak high and also this weak high. What I teach in my courses and what I always keep in mind, that price likes to test weak highs and weak lows, because there's usually a lot of liquidity above those places, so the price likes to test at least 1 pip above those weak highs. So when I came to the computer in the morning, somewhere in here, I saw those weak highs and I was afraid that the price would want to test above them. So normally I would quit the trade at the view up in here, but because I was afraid that the price would reverse and test those weak highs, I quit the trade sooner. I quit it at the original take profit somewhere in here, and that was it. As you can see, the price actually made it to the view up, actually made it a little bit lower, and then tested the weak highs in here, right? So this is what I was afraid of. So this is how the trade played out. It was not an ideal trade, but you know, the markets never move exactly like you want them to move, so you need to work with what you get. So yeah, this is how it went. I hope you guys found this video useful. By the way, I'm publishing all those levels that I'm trading for our members in the members area as well. Let me show you real quick. So this is our members area, and this is that level prediction for that day. There was the US dollar, Canadian dollar, and new level at 38.58. Alright, and the lower level I was talking about 38.33 as well. Now, if you guys want to join us and trade alongside me every day, you are very welcome to do so. Just visit my website. It is at traderdale.com and click Trading Course and Tools. And in here, you can browse my trading education and indicator packs. You can join us in here by getting one of those packs, or you can get all those packs together at the bottom of this page for a discounted price. Alright? So thanks about watching the video. I'll see you next time, and until then, happy trading.